And we welcome Dan Clifton of Strategas Research Partners. Dan Clifton, when's the war going to start?
It will probably start tomorrow afternoon, about 1 or 2 o'clock, I would say. We're going to read the Constitution on the floor of the House of Representatives at 12 noon tomorrow. It's the first time ever. And then the games will begin. And the stakes are very high, Tom. We're talking about potentially changing the Senate rules away from a 60-vote cloture vote to a 51 simple majority like the House of Representatives operates. Those are big changes. And obviously the Republicans want to do something on spending. So I think they'll get to work right away.
Rip up the script. I'm curious about this with our new BGov effort in Washington. How do the lobbyists on K Street adapt with the new Republican Congress? Is that good or bad for the lobbyists?
Well, everything, as long as the government is growing, then it's very good for the lobbying community. There's a direct relationship between companies that spend on lobbying and their outperformance to the S&P 500, Tom. And that means that as the government is growing, the lobbying community is going to adapt. You saw a lot of Democratic lobbying shops purchasing Republican lobbying shops in the summer as the tea leaves were clear that the Republicans were going to take over. And you're seeing a lot of people who were in government for long periods of time leaving to start their own lobbying shop.
I'm shocked. Wait, stop. That's a break exclusive right now. Camera 7, break exclusive there. Public officials leaving to start up their own lobbying shops. Dan Clifton, I'm just shocked by that.
Well, no, and I would say that, the Washington, D.C. economy operates very differently than the U.S. economy. And when I travel across the country, I see a lot tougher economy than I do here. The restaurants are buzzing. The home prices are still going up. And that's largely the result of the government growing.
Let's get back on track here. The deficit, not a moment to lose. That's what Bill Dudley and Ed McKelvey said in my book here 4 or 5 years ago. I'm sorry, Dan Clifton, it's not a pretty picture. Does anybody in the feel-good Congress today, do they care about this deficit?
Well, I think people, quote unquote, care about the deficit. They don't understand the true cost of running trillion-dollar deficits. And then, the Republicans are in saying, hey, look, we're going to get tough on spending. They may do $60 billion. They may do $100 billion. But we're talking about a deficit of probably $1.3, $1.4 trillion this year. And in the size of it, we're not really making much difference. From a financial market perspective, Tom, I would say that if we see some progress on growth, which the ADP jobs report shows today, and then you get some sort of spending reduction on the discretionary side, that's progress. That will buy the financial market some time. If we fail on spending, I think there's going to be a lot more concern over the deficit throughout 2011.
We stay on the deficit. Charterpalooza here, folks. Clifton, tax revenue to the rescue. Tax revenue to the rescue. You've been leading on this, Dan. Others have pushed back against you. Do you reassert here that we will see receipts come in and the revenue side will help out?
Tom, we're so bullish on tax revenues right now. I mean, if you look at just the change in the stock market, that's good for another $100 billion of non-withheld capital gains and dividends that come in February, March, or April, this tax collection season. So we're going to see those gains. Corporate profits up, spending up, jobs up, all that's positive for revenues. The problem is that spending is growing at the same level, if not higher, on the tax revenue side. And that's we're not getting the benefits of a cyclical recovery in terms of the federal budget right now, and why we need to get government spending. Right now, it's about 24, 25% of GDP. We got to get it back to its historical range, Tom, down to about 21% of GDP. And I think that's what came out of the Bowles-Simpson report itself.
Are we not going to have local and state challenges? Everybody else but Dan Clifton is saying we're going to have serious local challenges.
Well, okay, on the state and local side, it's actually even better than on the federal side. Because of the balanced budget requirements, Tom, their spending has been cut at the state level by $75 billion. So their revenues went down by $75 billion, but so did their spending. Now that you're going to get the top-line growth at the state level from the revenue side, you're going to see a dramatic improvement in state budgets in 2011. That does not mean that we're not going to have volatility in the market. People are moving away from fixed income into equities. And I got to tell you, no matter how many times I publish a research report, institutional investors believe that states have hundreds of billions of dollars in deficit. The number is about $40 billion, Tom.
Rex,
so it's going to take some time to get there.
Rex, we need to make a banner. Clifton disagrees with the known world as we know it. This is such a different view than the gloom you hear about state and local government. Earlier this morning, on Surveillance on Bloomberg Radio Worldwide, I spoke with Ian Bremmer of Eurasia Group, and I asked him about the new phrase phrase that he coined, the G0.
At the global level, whether we're talking about climate, trade, currency, indigenous innovation, you name it, there's going to be an absence of leadership. And so as a consequence, we think we shouldn't be talking about the G20. We should be talking about a new world order we're coming towards. It's the G0. And that's one of the reasons why we expect gold prices are going to stay high, even with the U.S. rebounding, why we think that corporations will keep trillions of dollars on the sidelines. They're just very uncertain about where the world is heading.
Ian Bremmer there. I love that phrase, G0. I don't know if he came up with that, but that's a great idea. Here, Dan Clifton, G0 international, take it domestically. Is there going to be a G0 in Washington where no one agrees and there's no real leadership?
Well, we haven't had leadership probably for the last 4 or 6 years, at a crisis in the middle of that. And we're starting to see leadership develop. I'm very optimistic that we're getting there. But, Tom, the real leadership is coming at the state government level. And those state governments are facing huge unfunded liabilities. Nobody's denying it. You're going to see Chris Christie get half of the unfunded liabilities of the pension accomplished with a Democratic legislator, and that will translate to other states. The other states will then translate up to the federal government. This is just like welfare reform in the 1990s on steroids, because the issues are so much larger and the consequences are so much greater.
Well, Dan, you're optimistic. Do you agree with Byron Wien that we could see a 5%, shave it, a 4.8% GDP? I mean, are you so optimistic that we could see way above potential GDP this year?
Absolutely. Byron Wien is somebody I respect very much, and I think that he's somebody that we need to listen to. There are just little changes in the way the price of oil fluctuated in 2008 and 2009 that may lead to 5% GDP growth in fourth quarter 2010. Strategas is at about 4.2% for 2010, but I think that the bias, if we're wrong, is to the upside more so than it is to the downside, at least in 2011.